Look, it's been a really wild ride, and we are getting that Santa Claus rally, certainly a little bit even early. But there's a lot now with the rally that we have that maybe took a little bit away from what we thought might happen in 2024. So I think now's the time to be a little bit more disciplined about the way we enter the year.
And I had the wonderful opportunity to actually meet you at your Outlook event a few weeks ago. And I'm wondering if after that Fed dovish pivot, you had to change anything from your 2024 outlook.
Well, Emily, as we talked then, it was interesting because a lot of the things that we were pointing out is where fundamentals were pointing us for 2024. And as soon as Powell kind of said the Fed put is back on,
Mm.
those things really started to ramp up. Areas like small cap, right? It's an area that we've been looking at really closely for the last couple of quarters at least. The market really hasn't been paying that much attention, but that's where our investment teams saw a lot of value. And as soon as it became clear from Powell that, look, rates are going lower, that area of the market really, really lit up. What I would say though, Emily, is where we probably want to be a little bit more cautious is the type of small cap stocks that investors enter into. There still are a lot of small cap names that don't have the best balance sheets. We're more interested in quality and looking at small cap stocks that have free cash flow, that have better balance sheets, those names, and margins, obviously, too, maybe the margins above 20%. Those were the names specifically that we were calling out that are durable and can last whatever we do see in 2024.
Hey, and one of the things that had, I think, concerned investors, certainly for the first maybe 9 months of this year, was the lack of breadth in this market, the Magnificent Seven driving most of the performance. But that seems to have improved a little bit. We've had the Russell 2000 really outperforming over the last couple of months. How do you think that's going to play into 2024? Or you think you'll see some continued improvement in the breadth out there, or should I just jump on the Magnificent Seven for next year?
Paul, it's so interesting because, as you and I both have been trained over time, fundamentals really do matter. And, it was as we really dug in and I did a lot of work on this, the Meg 7 really did generate good returns in 2023 because they had really good earnings relative to the rest of the market. And so, okay, I'll give them that. But when you look at the 30% plus earnings growth that many of the Meg Stock 7 or the many of the Meg 7 had, at least five names out of Meg 7 grew earnings over 30%, many for over 40% in the third quarter. It's going to be really hard for them to top those. Compares now become very difficult in 2024. So I think we were also saying where our compares are easier. And again, that showed us where the breadth of the market could be in 2024. That pointed to areas like small cap, but also areas like healthcare, where earnings growth appears to be the best almost of any other
Hmm.
sector. As I look to 2024, 20% or more earnings growth. No, look, it wasn't great in 2023, but we think the prospects there are pretty good in 2024. So driven by fundamentals, we think the breadth is going to be much broader in 2024. And, you know, not that the Meg 7 are bad. It's just that the chances for them to top that growth rate is going to be a little bit more difficult.
So then what does it tell you about the market that we're in that people are still buying the Mag 7? You look at ETF flows, we saw a record inflow into SPY, S&P 500 ETF last week, $20 billion in. It looks like stocks more broadly, and a lot of this is coming from large cap, $69 billion into equity ETFs in December. That's the best month since 2021. What do you make of that, I guess, euphoria just piling into these large cap stocks? Or should people be pivoting into other areas then?
Well, we personally think they should, Emily. And I think, sometimes, and look, I think investors, generally speaking, are very, very smart. But one of the things that has gotten disjointed is this heavy overweight in these Mag 7 stocks. And so, when you're buying an index, when you're buying the Russell 3000 growth, when you're buying just the Russell 3000, when you're buying the S&P, you're buying the most expensive names and you're buying 30-40% of those names and much less of any other. And so while you might think you're diversified, you're buying, very chunky portions of a few names and very few of the others. And so, we think taking a much more active approach and having fewer names, but owning a broader portfolio makes sense at this point in the market. And we think returns can be better. Now, it's not surprising to me that those ETF flows are going there just because of the structure of the indexes, but we think it should change, and we think it will change when the performance of the other names starts to show that they can produce the fundamentals that I talked about earlier.
Hey, Ann, how about valuation here in the market? We've had a big move higher. I'm not sure we've necessarily had a commensurate increase in earnings here. How do you guys think about valuation here?
Yeah, that's what makes me a little bit nervous, Paul. Certainly I can point to the 493 names that aren't as highly valued as the overall market, but I do think we do need to see some catch up and we do need to see the fundamentals play out. And so, I don't love the fact that we've had this really strong rally here. And I do think we're entering 2024 with a much foggier environment. Yes, inflation has come down, but we have problems with the Red Sea right now. The geopolitical risks as we enter 2024, you could say, are much higher than when we entered 2023. It's a political year, an election year. Now, typically those end up being up markets, but typically also pretty volatile. And so I think, it's going to be much more challenging than investors believe today. That being said, we think we'll end up having an up year, but it's not going to be up, double digit. We think it's going to be kind of up single digit, maybe high single digit, but expect it to be a rocky one.